All right, well, good morning, active traders, and welcome to our Trading Week Ahead live broadcast. I'm Ken Calhoun coming at you live from Colorado here on Saturday, September 24th, 2022. So are you guys doing good? I hope that you're doing well in the markets. Let's start off with a quick brain teaser. Now, I'm long 750 shares of UVXY, but I didn't go heavy. I would have gone 3,000 shares except for one thing. I would have shorted the market aggressively yesterday for a weekend hold, for an overnight hold. I am long UVXY, SQs, and other inverses. There's two technical signals on this chart that kept me from going heavy short the market. What are those? Dum bum bum. Cue Jeopardy theme song. Yeah, Wendy. Hey, Mira, how you doing? Tropical storm. Yeah, stay safe. Right, William, you got it. Wendy's got it. Silver's got it. Mira's got it, right, Mira? Mira's got the smartest one, of course. I'm so impressed, Mira. You're so intelligent. It's great. You're always right. So that's cool. It's hard to find. So perfect prescription for success. Right, Bambino? I like your humor, William. That's a good one. I'd hit that. Yeah, right, Kent. You got it. All right, so I made almost $1,000 yesterday because I know how to fucking trade, but, and it's pardon my French, I know how to trade the markets, and I'm a real money trader, and I'm happy to show P&L proof anytime. Unlike my competitors who don't even really trade mostly, I trade them real money count daily. I did 136 round trips yesterday. I only made 938, so it's not that much but I scalped a lot yesterday. Anyway, the point is, why did I not go heavy short into the weekend? Amira got it, and so many of you others. Two reasons. The number one, by the way, I learned so much from my great colleague Steve Nissen from candlecharts.com, is hammer time, baby. So we got hammer support in the market yesterday. So for that reason, that's the main reason. That's like 80% of the reason I did not heavily short the market yesterday. It may well keep dropping. So I placed a small bet, placed a little bet, 750 shares of UVXY. I'm probably under 20 grand short, so pretty small size. We've got a bullish hammer at support. So I don't want to short the hammer. That's usually not a good idea. I'll short the loss of the hammer down to 3,600 aggressively. I'm going to make a lot of money this year. And I'm going to short the market heavily under 3,600. But as we hit support, we may get a dead cat bounce and then drop. That's what I'm hoping for. But we may get a big pivot back up. So I did not aggressively short. One thing I learned from Steve, very smart guy, I highly recommend candlecharts.com. He can honestly help you become a better trader. Certainly helped me, and I worked together with a guy for 20 odd years. He teaches a lot about the risk reward profile for the charts, and that's extremely important. It's not just about isolated candle patterns. It's about risk management and the trading system. And of course, risk reward evaluation is a big piece of that. So I went light short. Now, if we just had a regular a candle like this or a doji or something, I would have heavily shorted the market. But that's the number one reason why I did not heavily short the market. I went relatively light short. The other reason, as many of you noted, is we're at obvious support right here. So we have two reasons not to heavily short here. We have horizontal support at that 3650, and we have a hammer. So it may well do a bounce, and I may take a small stop come Monday morning. Or it may just crap out and keep going down and make even more money. Anyway, so that's two reasons. I still took the short because I'm in direction of the trend, and so I trend your friend, so I placed a small bet. That kind of thinking is one thing that I urge you to give some careful consideration to, is place your bets, always trade, always be trading, ABT, always be trading when you have a signal. But the signal strength and the risk reward determines the size of the bet. Maybe I shouldn't call it a bet. Well, it's a bet anyway. Okay, it's a professional trade entry. It's a bet. Anyway, so placed a small bet, a few chips out there, but I didn't shove, right? So I won my first poker tournament in Vegas 8 years ago. It's great to have all the chips at the end of the tournament. Everybody's looking at the railbirds. Oh, what do you know? Well, part of it's luck, getting the right cards, and others knowing how to play them. Part of success in poker is being dealt good cards. The other part is playing them correctly. Does that make sense? You have to have good cards, and you have to know the skill to how to trade them or play them. As a trader, you need to have good charts, and you have to know how to trade them. You have to have both pieces of the puzzle. Anyway, so that's a quick note. I aggressively want to short this market, and I'm looking forward to it. We're at a low here. The other big note So obviously 3,600 support, and I'm going to use the 3,750 resistance. Let's take a look at our VIX. Remember friends, wow, big turnout today. Last week, I gave you the 22-24 region for support for the VIX, right? Remember that? If you go back and look on YouTube video, you can see for proof. I nailed it. But we have a bearish upper shadow yesterday, so it's still a very bearish signal, though. We did not lose the support under the 22-24. Remember, I'd called 24 support. And I said, as long as we stay above 24, we stay short, right? And that was my bias going into this week, and I profitably traded this week because of that. And I hope that you guys made even more money than I did, right? It's always a thrill to hear success stories from my traders. Anyway, the VIX is up, which is bearish. So that's good for us bears who are trading inverse instruments. Support resistance is obviously, I would just use the previous candle, 33 by 27, right? So we want to aggressively short the market. Now I gave you the success tip last week. I was correct. I nailed it for you guys. I said if the VIX gets over the 26, or I should say over the 28 and up over the 29, it'd be a good opportunity to short, and I was correct. We nailed it this week. Upcoming week, if the VIX gets over 33, you want to aggressively, or at least I want to aggressively short the market. Now here's the more important tip: when not to trade. If the VIX cycles back down and stays, signal to noise on that's 26. 27, 28, 29 is indeterminate. I used to be a statistician for Ford Motor Company, so I very much know data sets and how to evaluate charts. Kind of like what you do in manufacturing engineering, but the opposite. In a production environment, you use what's called process capability charts, or CPK charts, and you want to have things as close to making the widgets the same as possible. You want a straight line. In trading, you want the exact polar opposite. So if you have a background in production, apply the opposite of what you learn with CPK and variance management to trading, and it works great. Anyway, the point is, I'd use 26 as support on that data set, right under the 26. So right here, so right there. So if we lose that level, let's call it 25.50. If we get under 25.50, we may have a bullish recovery. I doubt it. I think the market's going to crash and burn. We have all kinds of reasons to sell this market, not the least of which is inflation. With inflationary pressures out there, average homeowners and you and me average folks out there, well, not me, I've got a lot of money, but people who maybe don't have a lot of money, they'll have to take money out of stocks to pay for living expenses and out of equities to pay for just cost of living stuff. So people will be scaling out of their equities. That's another downward pressure that the talking heads don't talk about on television. Now, one thing to look at is instruments. Now, of course, in my live room, we do cover the days, the cheap gap stocks or whatever's running that day and all that. But more importantly, we cover ETFs a lot. My live room, I spend a lot of time trading. Most of what I trade is ETFs, by the way, nowadays, because I do so well with them. Maybe 70% of my order flow, my order book is ETFs like SQs, TQs, UVXY, SOXL, SOXS, etc. Things that are leveraged and have lots of volatility and do not have significant overnight gap, as do equities. So I love ETFs, especially inverse ETFs in a bear market. That's the way to trade. I'm the guy to learn that from. Anyway, I've been calling SQs long since 36, I think it was, 36.40, I believe. So anyway, now it's up at 56. What's the problem with this chart? Hint, it's the exact opposite of the spider's chart, S&P chart. So the main point is, if you're long SQs right now for a swing trade, what has you worried? What would have us concerned? Hey, thanks for the heads up. Let me make sure our audio is good. Yeah, audio should be good. Hopefully audio is good. Audio coming through okay? Yeah, the candle, the shooting star. Thanks, Jim. Appreciate it, man. You'll get a short squeeze up there. We're getting near resistance, number one, and more importantly, we got a shooting star. When you wish upon a star, hope it's not shooting if you want your trade to go far, because it's blah, 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 blah. Anyway, ba-dum-ba-dum-bum. We got resistance at 58, so I'm not going to buy my SQs till we get and hold over the 58, and especially over the 60. I'll put on little test trades right over 58, but I'm not going to put on size and SQs till we break that decade value over the 60. So that's a tip that you may want to pay attention to. If it chops and drops, we stay out. If it gets over and holds over the 60, SQs would, again, not a trading recommendation, but something I like to look at is swing trading, because look at how much money you could have traded, almost double. Well, there's double, so we're within spitting distance of double for the SQs. Other really spectacular instruments include TZA, the Russell inverse. It's ran up nicely. I also trade the commodities. Short crude, by the way, is reaching a 90-day. It's not quite there yet, but SCO, if you want to short crude, I like SCO. It's finally broken out of that range yesterday. That's another quick professional tip. The short crude oil ETF broke above its 3-month-long resistance there around 28.5, right? It broke 3-month, well, yeah, 3-month high resistance. See how that chop here, right? This is a consolidation zone. We broke above that. And resistance, however, is right back here. So I want to aggressively go in this if it breaks 32 and short crude. You might want to write that down. And the other one is our nat gas inverse, KOLD, and it's starting to light up too. It took a big, this thing's very volatile. It's in a nice uptrend here though. I want to scale into KOLD if it continues on up. It's been up the last week and a half continuously, so it may just be getting the party started to break clear the 20, the 18 to 20 region. So natural gas inverse is a probably good play for a swing trade. Now we cover these kind of instruments, and of course our intraday charts. Was anyone trading Saba? It had a good move Thursday and Tuesday. It did a big epic drop, and we called the bounce for your worst traders at 42.40. Yeah, it ran up to 44. Anyway, SAVA is a good example of an intraday chart that had a spectacular run both Tuesday and Thursday. Now notice, one thing that I teach traders is that often after a big day or a gap, the next day is usually a narrow range, not tradable day. Then you have, often it's on, off, on, off. On, off, on, off. So in this chart, you can see we had a big day on Thursday. We had a big day on Tuesday as well. If we pull that up, let's look at a few days of data here. Oh, big turnout. Wow. Good to see everyone here. We have context. Now, fell off a cliff yesterday. I called it short, by the way, 47.70, I think, at 47.80, 48, right under 48 yesterday. So I called it short for my traders. Specific entry, I said, short this punk if it loses 48, which it did. And it was a great short call. And I called the bounce long a little late at 42.40, ran up a point and a half or so. Anyway, the point that I wanted to mention is that you often, after a big ass run day, you get a flat don't trade day. Then you get another big ass day, then a flat chop day. That cycling on and off is a function of a lot of the high frequency trading algos and just the nature of the market and volatility. You got high vol, low vol, high vol, or high volatility, low volatility, wide range, narrow range, wide range day. So, so don't get, my point, what this means to you as a trader is, don't get excited about trading something that had a really big multi-point day, the immediate day after. Instead, prepare for 2 days after. That's a rider downer. That's an advanced tip. I don't think I published that in Stocks and Commodities yet, but that's, see my column too, Trading on Momentum, really popular. And thanks to all of you for voting for me. I was rated #1 author in 2019, so a couple of years back. Appreciate the votes. Anyway, big days followed by flat days, followed by big days. So #1 is, if you miss the big day, which we often do, I didn't trade Saba on the Tuesday, but I told my traders, expect this not to do anything on Wednesday and don't trade it on Wednesday, but we will look for it on Thursday. And I nailed the call for my traders on Thursday over the 40, was a long call for my members. So that's a rider downer. A new technique or a tip is, if there's a big day, a wide range candle, expect the next one to be half or less the range and don't trade it. But, and this is the tough part, remember to look at it the day after that. So 2 days after the big day. So this was a hot day, cold day, hot day. Inhale, exhale, inhale, okay? And on the candlestick chart, you can see that illustrated here. And we'll move on in just a sec. Let's take a look. See, big day, doji day, big day. Big day, flat day, big day. So that's a valuable tip. That one works. All right. Now, for these kind of tips and more, do be sure to join my live room. I've got a special going. make it up on volume, which is why it's so inexpensive. This one is, and it's money back guarantee. I've just worked up this page this morning. I haven't had time to add that, but I'll add the guarantee button if you want. Or I will add a guarantee to this. It's only $97, no recurring, no subscription. You can get access to the room from now through the end of October for just $97. And that's a great deal. And there's no upsells, no bullshit, no add-ons, no subscription required. This is a great way for those of you who are new or kind of on the fence. I guarantee your satisfaction. If you don't like it, I'll happily give you your $97 back. I'm rich, I don't give a fuck, but shouldn't say that. I'm very honest. You could give me that. I'm very honest. Anyway, I really honestly don't give a fuck. Anyway, you can have access to my Zoom meetings. We meet Monday through Friday. We meet 5 days a week, 8:30 in the morning, and they're early, 8:30, usually 8:15, 8:20, all the way up until 11 o'clock. And then we meet in the afternoon from 3:30 to 4. And I cover swing trading daily at 4 o'clock. I always put on trades, and I show traders my actual real trades as I'm doing them for adding to or initiating new trades or scaling out or taking stops for ones that go down after the market on each day at 4 o'clock. So if you're a swing trader, this is great for you. I also give swing trading entries in the morning, but mostly it's day trading in the morning. And we do some swing trade calls and day trade calls in the afternoon. So you can get access for all the way through the end of October for just $97. That's the best deal I'm going to give you this year on the for the low end deal, and that's a good one. So that's worth doing. And I guarantee your satisfaction, or I'll give you your money back. So no risk. Risk is all on me. My reason for offering this is I want to give you, it's kind of like going to Costco and getting a free sample, well, close to free sample, money back guarantee. So whatever a sample, and if you like it, maybe you'll subscribe as a regular member. There's so many members nowadays. So many people have been flocking to my room after being fleeced by these con artists out there that get busted by the Federal Trade Commission for lying about things and misleading their customers and all that. I'm honest. I'm a professional, and I'd be honored to have you as a member. So try me for $97, and if you don't like it, I'll give you your money back. So that's a deal. That's the best, cheapest deal I'll give you this year. And I'm not going to repeat that, at least not this year. So access from now through Halloween, if you register over the next week or so. So anyway, I got a lot of Trustpilot. Now I'm up to all of 22. I just started with Trustpilot 2 weeks ago. Anyway, so that's at trademastery.com/gold. Okay, enough pitch. Let's get back to our markets. No more pitch today, I promise. That was it. All right, what else we got? One thing I want you to evaluate is likelihood of success. Let me get this back to the day traders chart. Now I knocked this punk out of the market yesterday. Almost all of my $983 up yesterday was thanks to my trading UVXY. I'm very experienced in trading. I did over 10.1 million worth of order flow in UVXY last year alone for day trades. And you can see a lot of, pretty good chart. It's in a nice uptrend. This is a good swing trading chart, eh? Now again, I would have put on, I was thinking 2,500, maybe 3,000, except for the fact that the market's at support and there's a hammer, so that's usually not a good time to short unless it capitulates and loses support Monday or Tuesday. Then I'm going to go all in on this. I'll be in at least 3,000, maybe 5,000 shares of UVXY. I want to put some size on this punk because I know how to trade volatility. I remember when I traded, what was it? Here's some P&L proof for you, baby. What do I got? I'm not going to show. I showed it before. TVEX. I remember I bought it at 54 and I sold it less than 12 weeks later at 940. Unfortunately, I only traded 3 shares, but I still made almost a couple thousand on that. So that's the biggest point win I've had in my life. 54, sell 940. I'll call that luck. I don't think that's going to happen again. But I have fond memories of that, and I want to not F up and just trade small the next time it happens. And I think we're on the cusp of a potential big ass bearish sell-off in the stock market between now and at least late November, early December. We may get a Santa Claus rally late December, but until then, I think the market's going to sell. I could be wrong, but I'm usually not. So anyway, this is a good instrument to get started with, and I'm an expert in trading it, and you have my word, I can teach you how to trade it, so, and many other things. So that's one thing to look at, UVXY, and I like it. I day trade SQs. It didn't do very good yesterday. Kind of a pun. It's good for a swing trade though, right? Intraday though, it's kind of strange because often SQs has had better has had better intraday range runs than UVXY from a percentage standpoint. But lately, UVXY has beaten this one. This one's still good for a swing trade. Nice steady uptrend, right? So if you want to short the NASDAQ, you hit your SQs. You want to short your Russell, you hit your TZA. You're going to short your semis, you hit your SOXs, right? Anyway, I think that's about it. Let's see. Hey, thanks, Brian. Hey, thanks, Bill. Let's see. So if we had a big day Friday, don't trade Monday. Yeah, well, it depends on the chart. But yeah, as a rule of thumb, if you have a big range day on a particular instrument one day, you don't trade it much the next day because it often gets a compressed range. By the way, the same thing is true for gaps. You know this often, right? After a gap up, the day after is often a mean reversion, pull back to the middle of the range, or a choppy ass day that's not worth trading. So those kind of tricks of the trade are things that take a lot of years of real experience to learn the hard way, right? I've made every mistake in the book. I've taken tens of thousands of stops, but also thousands and thousands of wins. And I've learned the difference, and that's what I teach. Authentic, correct, and very specific. Another thing that sets my live room apart from anyone else in the world is I'm good enough to give specific entries ahead of time and real-time exits and real-time re-entries. So I run it like a squawk box. Okay, we cover a lot of different instruments. I got so many smart traders there, like Ari and Mick and Thomas and so many others, and Wendy and so many people that have given us really good alerts. And a lot of times my members come up with better charts than I do because I've taught them what, and they know what to look for. So as a team, we have lots of eyes and ears on the market, intelligent people, not stupid people, right? I tend to attract the best and the brightest. I tend to repel the people who are dumb. And that's how I like it. I like working with smart people, or at least people have an interest in becoming smarter. And so that's one thing that I'm very honored to work with so many smart traders. Hey, thanks. Wow, I got a big turnout today. Thanks all of you for being here. Anyway, yeah, big numbers. So epic traders from. Hey, where are you guys from? Do I ever trade SDAO? No. Some of the others like SD, I used to trade SDAO and SDS and SRTY, I want to say, but the percentage range isn't big enough. Range is everything. You want to, when you're doing a comparative analysis for which charts are worth trading, you want the ones with the biggest profit potential, and that's defined by big range. By the way, if you have any questions, type them in chat and I'll answer. Where are you guys from? Can Apple hold up? I take a bite out of Apple. The stock market's going to hell. Probably a good time to short. I'm not going to be in any, I'm not in any stocks right now. And yeah, John, I focus on inverses that are going up. We got Vegas in the house. We got Phoenix in the house. Where are you guys from? I'll stick around a few minutes here for you. We got a really big turnout, so I will stick around and answer questions. I don't have anything on my radar today to do, so I'm at your disposal. Normally I end earlier, I end on time, but I will stick around a bit because I got a big turnout here today. Let's see. I like, for example, if you're evaluating which instruments to trade, as a hedge, I even, because the market was at support, this will probably go against me, but I bought a little bit of SOXL because there's a hammer down there and it's cheap at 10. So I only bought like 100 shares, but a little punk ass trade, but it's cute. I'll take the shot. If it drops to 8, I'm down a little bit. If it bounces, great. And I bought a little TQs, but I mean, just a very tiny bit. What I bought more of is SQs because it's going up. I bought a little Lab D because it's starting to bounce. Shring. By the way, this is what I mean by big upside range. Let's just focus on the 1 year. You want a swing trade charts that at least had came off a double or better, right? So this thing, a double, this is a triple, a quadruple actually, came from a high of 80 down to 20. So it's a 4-to-1 high to low. What's not worth trading for a pivot or a bounce, and this is very important you get this. Honestly, it's very, very strategically valuable. You don't want to trade something that went, say, from 25 to 21 and it's starting to bounce because your upside's not worth it. Something that went from 60 to 20 and starting to bounce, okay, that's a shot. Or things like my beloved UVXY. Now remember, I told you guys this was overdone. Remember, it was like a month and a half ago. I told you this had been going down far too long and it was going to bounce. I was right. It's not doubled yet, but I easily forecast UVXY getting back to 18 within the next 12 weeks. Easy. That's a hold me to that. Remember, in 12 weeks, probably a lot faster than that, but I fully expect UVXY volatility to surge. And when the VIX spikes, this spikes with it. Notice, please, down, then big ass run up, then down, then a big run up, then down, then a big run up, then down, then a big run up, then down, then a little run up, then down, then a steady run up. That's a strong, by the way, that's strong support. If something has a nice steady to 45-degree angle breakout, that's strong. If it's sharp, that's weak, that's not good. And if it's flat, that's not good. But if it's a steady 30 to 45-degree angle up, that's good. That's a good sign of lots of buying. And you can see the green days are bigger than the red days, so that's also good. I forecast this easy 16 to 18 within a few weeks, so probably 2 weeks at most. So I'm looking to build a sizable position in UVXY. I always hold at least 500 shares overnight. I'm looking to do 3, 4, 5,000. I may even get bold and do 8 or 10K overnight. So I want to trade size. Let's see, Craig's asking, meme stocks are a bad deal now that most Gen Z traders are closing their accounts. That's how I'm going. I'm not going to buy me any, you're not going to see me buying any Bed Bath & Beyond or GameStop or what was the other one? Day trading, yeah. Swing trading, no. This is a day traders market and an inverse ETF traders market. This is not a swing trade stocks market. For those of you who don't have experience, or depth of history of at least 20, 30 years of experience in the markets like I got, markets can go down and they can go down really hard and they can keep going down. You guys, young people, have not seen big epic sell-offs like some of us had back in the 80s and whatnot. So anyway, let's move. Yeah, AMC, that's another one that I'm not going to buy. See, Afshin's asking about GDXU. I was hoping GDXU would bounce, but gold's been still weak, so I scaled out. I bought a little bit, but I took stops on the drop here. I thought that would bounce off the 3. Now it's way down here. It's got lots of upside. I will scale into it over each whole number. So if it gets over 3, gets over 4, gets over 5, yeah, I'll get into gold. But for now, gold is still weak. Surprisingly weak, by the way. It's relatively strong on the sell-off. What I want is a recovery pattern. Like we're seeing gold is starting to bounce, and SCO is nice up at a steady up. So when you're looking for pivots, either you play a pivot off a sharp drop that pivots or a steady move that then has at least 3 days of recovery above a key resistance area. But yeah, good charts. Anyway, we've got lots to work with. And one thing you want to pay attention to in our broad market, if you look at the 1-year spiders or the S&P, you can see that's a pretty terrible chart. Now, I would forecast a bull trap slash, and by the way, I would not buy into any pivot in this market. We may get a bounce as high as 390 or 395, but risk reward is not good enough. The numbers are not good enough to take shots for swing trading equities right now. We have so much sell pressure and so much bearish sentiment out there, and so many earnings misses likely coming up because of taxes and inflation and all the other wonderful stuff that our illustrious leaders in Washington foist upon us. I won't talk politics, but the point is, it's not an equity-friendly environment right now. So it's a good time. So we'll probably get a dead cat bounce, a little move up, and then an epic sell-off. So don't buy the dead cat bounce. I'm not giving advice, but personally, I'm not going to swing trade any stocks in this current market. I'm swing trading inverse instruments because they're going up while stocks are going down. So with that configuration, I expect a dead cat bounce as high as 377 and then a roll down, and I will aggressively short the 360 or 3600 in the S&P. So good stuff. Yeah, rallies are very short in a bear market. Exactly right, Mira. Maybe 3-4 days. I completely agree with you, William. Yes, I didn't vote for him. Can I look at TLT and TBT? Sure thing, Wendy. Yeah, I can. So let's wrap up today's broadcast officially, and I will, but I will stick around for questions. Thank you for being here. Remember to go to, so I don't want the YouTube video to be too long. Do remember trademastery.com/gold. If anything of what I've said has made sense, I guarantee your satisfaction. You can join this, and I'll put a guarantee button on this later today. Just $97, no subscription. It ends at midnight on October 31st. Boo, Halloween. So anyway, you got access with me for the rest of this month and all of October for just $97, money back guarantee. That's a really good offer. You get dozens of hours of training with me and live alerts every single day for less than, $100. So that's a good price, I believe. And it's a good, honest offer. I hope that I can earn your trust and, help you make improvements to your trading like I have for so many thousands of other people. So let me go ahead and wrap up with today's broadcast, and then we'll continue on with Q&A. But visit trademastery.com/gold.